Paul, thank you for coming.
My pleasure.
I appreciate you being here. I guess it would be good to know a little bit about Paul first. Currently is a partner at Sapphire Ventures, but before that was president, CEO, or COO of Trulia, through the acquisition with Zillow. I think very interestingly, was involved in real estate for a long time with Yahoo before that. Curious to talk more about that.
For sure.
And then also just worked with companies early in his career, like Intuit and E-Trade, pretty cool companies. So, I guess first off, maybe give us a little bit about what are you doing now? What's the fund?
Yeah. So so I joined Sapphire Ventures last year. Took about a year off post Trulia, and I'm now a partner at Sapphire. We're a growth stage VC, so we tend to invest in companies kind of at Series B, C, and sometimes beyond. And so we're kind of waiting until companies have found product market fit or starting to scale. And we really invest across the whole spectrum of kind of B2B and consumer facing. Each partner tends to have her or his area of expertise. And given my experience, real estate tech and consumer, that's kind of where I'm focused. And we've been invested in companies like LinkedIn, Fitbit, Square, Box, DocuSign. So an investor in a company called Reonomy, which is a New York-based data platform for commercial real estate developers. Yeah.
So what's interesting to you in real estate right now?
I was interested in real estate, at the intersection of real estate and technology all the way back then, but we were just kind of too early and never really got to critical mass. Certainly the Trulia experience was really exciting, and I feel like as much as we accomplished in helping your average consumer figure out what was on the market, find a place to buy or rent, and help agents kind of figure out how to market themselves online, we still really were only in the early part of a consumer's journey in real estate. And it's just exciting now to see. I feel like a lot of that set the stage for what's happening now with iBuyers and sort of next-gen mortgage, next-gen title, next-gen rentals. So it's kind of fun to just see all this innovation happening now around the real estate transaction, which frankly is like everything we did was only your kind of front end of the process, and now the core transaction. I feel like a lot of companies are bringing interesting technology to that.
So what were you doing at Yahoo? Like how did you guys approach it back then?
Yeah, so it's interesting. So I was, I'm going to date myself now. I was at Yahoo 2003 through 2007. So when I joined Yahoo, Google was still a private company. Yahoo had more search market share than Google did. It was a little bit of a different era, just kind of in the evolution of the web. Interestingly, so I ran a group that kind of had a few different Yahoo properties. The area that I spent most of my time on was called Yahoo Local, which was basically a Yelp. Don't look at it now because it's terrible. And was kind of around. I've always been fascinated with this idea of just connecting people with the information and things in their daily life right around them that just really matter a lot. And it was, we moved the ball down the field a little bit, but I feel like we only really scratched the surface. We didn't, and there's a lot of reasons why. We just didn't invest enough in it, right? I think I think this was a little bit of the curse of the incumbent where, my decision as my sort of like decision space as the guy running Yahoo Real Estate was we could do a little bit of the work and then partner with others who were aggregating listings and kind of in the local markets, generating the content and getting real estate listings, and just sort of almost collect a fee as the channel owner or toll taker. Even in my group, I had bigger fish to fry with building Yahoo Local, figuring out how to compete with Google in search and mail and maps and all these spaces. Yeah.
Why then did Trulia look like the right opportunity when you came along to it?
Yeah, local search and content was pretty fascinating, and in particular, the real estate vertical was pretty interesting and fascinating. Like most good things in life, there's a bit of serendipity to the story. So the person I hired to kind of run real estate product into Yahoo ended up leaving and becoming the first product lead at Trulia. Then at Excel Partners to Pete Flint, who was the co-founder and CEO of Trulia, who wanted to do a Amy Glenn, who worked with me at Yahoo and then with Pete at Trulia, and now is a co-founder of Knock, which is also, so he also had the real estate tech bug for many, many years. I stayed in touch over the years, and I was interested and intrigued in what he was doing, and eventually reached a point where he was really looking for someone to come in and help him build out the company, and the timing was right. And
so when you joined, what did the core business model look like? What was your go-to-market?
Joined Trulia, we were probably, I think the company had been around for maybe 4 or 5 years, had about 100 employees, had about 20 million bucks in revenue. And the core of the business at that point, I would say the early years of Trulia were mostly about building a great consumer search experience and getting enough consumer search activity to, to start monetizing and start building a business. If you think about it, it's sort of Trulia's business and Zillow's is kind of structurally similar to a Google or a Facebook or a Yelp, where it's kind of free to consumers, and then you generate revenue by advertisers kind of spending to connect with those consumers.
And when you joined, you felt that you had that critical mass?
It's interesting. In the early days, and even when I joined, it was sort of a mix of different revenue sources. We were mostly trying to kind of identify easy-to-reach national advertisers, like big brokerage brands that had a national footprint, or big lender brands to kind of advertise on the platform, Remax, Coldwell Banker, Wells Fargo, and so on. And with one sale, you could bring on a customer who actually wanted to reach your entire national footprint. And that was a great place to start. Personally spent a lot of my time was trying to figure out what products to offer real estate agents, like how to help your local individual realtor take advantage of the Trulia platform to build her brand or generate more leads. How do you charge for it? How do you develop the go-to-market? How do you handle retention and churn? And that was a big part of the story.
So I guess selling to individual real estate agents is complicated, expensive. There are a lot of real estate agents.
Yeah.
How did you balance that with the enterprise? So why go down market? How did you actually build that out?
Yeah. So it was sort of an evolution, I would say. As I mentioned in the early days, you sort of like pick the low-hanging fruit, which was the big national advertisers. When the mortgage crisis came around in kind of 2009, 2010, a lot of those advertisers, the dollars just dried up. So to a degree, it was a bit out of necessity. We're like, oops, we've got to find a new customer base to get on as customers. So while those brokers and lenders were under pressure financially, the agents were more hungry than ever to try to generate leads. I think at this point, most agents had, the iPhone had come around, most agents had phones. Shift our focus from sending leads to brokers and lenders to doing a little bit of that, but mostly sending leads to local agents. And if you think about it, it's like Remax was buying nationally, but our local agent, we would sell to an agent who would be like the SOMA expert in San Francisco or the North Palo Alto expert in the peninsula. And that person on a per lead basis was just such a perfectly relevant match that they were willing to spend more money. They converted the leads at a better rate. It actually was a better experience for our consumers. Yeah. So that evolution from kind of like a national ad platform was a big step forward for us.
Did it feel during that time like, I guess, were you going head to head with Zillow, and at what point did it start to be, was it you punching each other so hard that you decided to team up?
We were founded and launched at roughly the same period in time. We were structurally very similar businesses. We started at slightly different starting points. Trulia was a little more focused on on-market listings. Zillow launched with the Zestimate, which was more like, for a homeowner or potential seller, what is your home worth?
Yep.
But we pretty quickly converged on a full suite of content for consumers. And so we were competing for consumer attention. We were competing for agent dollars. We're sort of competing in all aspects of the business. But we were pretty confident in the game that we were playing, and so we were not really necessarily looking to join forces. Zillow approached us about a deal a few different times, and the first couple of times we politely declined, and then the third time we took a serious look. It was a great deal, and it was an interesting time to pull the companies together. So we sort of put down the swords or punching, boxing gloves or whatever, and joined forces. And I stayed for another 2 years post that acquisition. So it was a really interesting journey for me. A couple years as a private company, and then Trulia went public. 2 years as an independent public company. Zillow bought us, and then another 2 years as running Trulia as a unit inside Zillow.
One thing I think we're seeing a lot of now is people building new search platforms. So like Opendoor has their own platform. Compass is trying to build a lot of stuff there. You have Quicken, who has their own product there. How defensible are the consumer platforms, and like how strong are those network effects? And if a consumer is willing to look around and shop, like how does that impact it?
Yeah, I mean, I'm certainly a bit biased. I've seen how hard it was to build what we built at Trulia and what Zillow built, and I see firsthand how much continued energy goes into improving those platforms every day. I would not underestimate how difficult that would be to replicate, both in terms of just the content and product experience and UI. As you know, from building a software platform, you have to constantly tweak and iterate and improve. And so there's 10 or 12 years of iteration and improvement that's gone into those things. Plus, it's just, to win consumers, half the battle is building a great product. So the years of really good SEO and app store optimization and consumer awareness building and all that stuff are, I think, will be really hard to replicate. It'll be interesting and fun to watch. And from a consumer's perspective, it's always great to see, proliferation of new and interesting products. But it's definitely, I think it'll be a tough battle.
So one thing we're seeing a lot in the market now is, you mentioned Knock already, but Opendoor, Zillow has said, hey, we're trying to make the Zestimate a live buy offer. Right. We want it to be a price that you can look up and just, I'll sell at this price.
Yeah.
How do you, I guess, first off, how do you see that market? What are your thoughts on it? And then how do you see Zillow's competitive advantage there?
I mean, I really think it's interesting side note on that. So at Trulia, so Eric Wu, who's a co-founder and CEO of Opendoor, it was early in its evolution. So it was, I think, 4 or 5 people when we acquired the company. And Eric was on my team for a couple of years at Trulia. So I know him well, and we've stayed in close touch. And I've been amazed at how well he's done personally and the growth of Opendoor. I think it's a really innovative approach, and I think they've identified that things like convenience and certainty and speed matter. So it's funny, we sat there at Trulia for years and years kind of thinking, oh my God, agents generating 6% commissions, 5% commission in the Bay Area on $1 million or $2 million home. Like, how are people justifying spending that much money on a real estate transaction? And always figured that the next evolution in real estate brokerage would be a discounted model. And so it was very counterintuitive to see that Opendoor is gaining so much traction in what essentially is a premium model, right? Like, if you sell your home to Opendoor, you're generally spending, it's a 7 or 8% commission, is my understanding, relative to your typical 6% commission in those markets. But I think because as a seller, you're feeling so much anxiety and uncertainty about what you're going to get for your home and when it's going to close, and the idea of cleaning this place up and moving your kids out on a Sunday so that people can kind of cruise through your house on an open home, all that stuff I think is so daunting. What will I get for the home? How long will it take? Someone coming in and just providing this very simple, clear, certain value proposition, I think is really, really strong.
So right now there's a proliferation of these companies. There was another one, Perch, that raised $220 million this week.
Yep.
How does the competitive dynamic here end up working in your mind? Is it possible to have 10 successful iBuyers in one city, or do you end up having regionalized, or are there 1 or 2 dominant players?
Brokerage is one of the most fragmented businesses there is out there. And I know we were just chatting about title, and I know it's similarly fragmented, right? So like the biggest company in real estate brokerage is Realogy, which I think has 16% market share. So the single biggest brand in real estate is probably less than 10% of national market share. So it's super fragmented. I think a lot of the iBuyer players now there's certain markets where a lot of them compete, and then others are sort of coming up in different geographic markets. I do think it seems to me it's the kind of business where scale will drive where there's like a positive returns to scale in terms of just building awareness and access to capital. These are really capital intensive businesses, and there's only so many companies I think that will be able to raise that amount of capital. My guess is in markets where they're all going toe to toe, I don't think there's going to be 10 successful iBuyers. I think market share will concentrate to a few.
So with that, Zillow already has the consumer's attention.
Yeah.
If Zillow already has the consumer's attention for the Zestimate, what does it look like to compete against them? And then does winning that transaction in the case where there's a lot of bids end up looking like winning a insurance premium competition where there's some adverse selection if you actually do end up buying the house? Like, how do you see that?
Yeah, so I think Zillow's entry into the iBuyer space is fascinating. So maybe I'll just spend a minute on that. I left a year and a half ago, and we were already noticing when I was there the success that mostly Open Door, a few others were having. And one of the hardest things to do, one of the reasons why Yahoo didn't go after real estate is you sort of become satisfied and rooted in the current business you're in, and it's hard to embrace a new business may have different economics and a different model. And I think to Zillow's credit, I think they've just seen that this is a interesting, just transformational next-gen model in real estate. And as a public company with $1 billion in revenue and a $6 billion market cap, they launched a new line of business. The street generally has not been a fan of Zillow going after this, and they've said, screw it, we know the right path for this company. So it's impressive being willing to innovate and take risks, knowing that there's that there's sort of risk inherent in it. I think Zillow is going to be a pretty formidable competitor in the space because there are a lot of sellers already on Zillow trying to figure out what is their home worth. I think there's kind of a consumer expectation that Zillow and Trulia and its sort of family of sites, but Zillow in particular, is a great place to go when you're trying to figure out what should I pay, what can I get paid for my home. So I feel like that starting point and built-in audience is definitely an advantage for Zillow relative to Open Door and Knock and other companies that I think are spending quite a bit on consumer awareness building. Ultimately, a lot of this will boil down to the most competitive bid for the seller's home, and it'll be interesting to see in scenarios where a seller gets 3 different iBuyer bids, will they trust a bid from Zillow more than a different firm that they don't know? Like, will that brand count for something, or will it essentially be a price-only battle?
Now, as from the investor side, a lot of the businesses that are succeeding or at least hitting some scale in real estate right now are services intensive.
Mm-hmm.
You look at Compass, you look at Open Door.
Yep.
Companies that are raising huge amounts of money are providing like low gross margin, very, very manual, operationally intensive businesses. How do you think about that from the investment perspective? Like, is that type of business interesting to you?
It is. I think having been in the space for a while, I can appreciate that these businesses are super complicated, but that ultimately the prize at the end is so big and so worthwhile. I think a lot of investors don't love it though. I think classic venture has sort of been trained to, or has found a lot of success in really high gross margins, software-only businesses where, yes, you may have a distributed sales and support team, but the core product is basically a software product that you can run out of headquarters. And so a lot of these businesses that have lower gross margins and a lot of local touch, I think, spook a lot of investors.
Yeah.
I think you have to be careful. Like, I do think understanding what the ultimate margin profile of the business is and having confidence that eventually this business will be profitable, I think is really important. But if there's some sort of phase of lower margins on the way to a high margin business, I think that's quite interesting.
Right. So you mentioned Realogy earlier. Yeah, I think Realogy's stock is down maybe 75% in the last 2 years.
Yeah.
What do you think of the traditional brokerage model at this point? There's so much competition, even from people like Compass who are doing the very, very similar thing.
Yep.
How do you see the traditional brokerages playing out?
I think it's a tough business. I think it's. I think the brokerage value prop has been eroded in a way not dissimilar to think about like what Wells Fargo is now versus kind of where it was in the past, or even the way that big box retailers are kind of under pressure. A lot of real estate brokerages, the thing that helped them grow over the last 20 or 30 years was the local brand that people knew and trusted. And I think those things are, in a world where people are kind of on their phone, looking up listings, know what they want, and then expect to be able to text an agent and get a response in 4 nanoseconds. Right. Having a branch on the corner of Main Street is less relevant. So I think the value prop that has been really strong for brokers is sort of commissions seem to be creeping down a little bit, but probably more importantly, there's pressure on the bottom line, which is agents have more options for generating leads. Agents and agent teams tend to be, strong, independent operators that can generate their leads independently of the broker, and so they're pushing for higher splits. Right. And so the broker's sort of getting squeezed on both sides, right?
One, I guess, related question is there's an increasing number of these referral brokerages.
Yeah.
We interviewed Ben Rubenstein, who started OpCity.
Yep.
Sold it to Realtor.com.
Yeah.
And I saw a news story the other day that they were testing having all Realtor.com leads go through OpCity.
Yes.
And I think it's just very interesting. That was an opportunity that Zillow could have done.
Yep.
How do you think about that model as it relates to the iBuyer model?
Yeah, it's interesting. So Zillow has been doing something like that. There's something called Premier Agent Concierge. And I think the insight that drives that whole thing is mostly for buyers. So I think the insight is that there's so many consumers on these sites, on Realtor.com, on Zillow, on Trulia, interested in connecting with an agent. But often what happens is the consumer will send a lead and it goes to the agent's inbox, or often it's email, sometimes they'll generate a text. And the agent will either be busy with another client or busy living their life, or will look at that email and sort of quickly decide this is not the person for me. And a consumer won't get a response, and the agent customer spending money to generate these leads, sometimes not even responding to a lot of the leads. So both Zillow with its Premier Agent Concierge program, OpCity, there's a company in San Diego called Agentology that's doing similar stuff, is basically trying to sit in between the consumer and the agent and help that an agent needs help with. And so I think it's pretty interesting. I think it's actually helpful for consumers because you sort of get pre-qualified a little bit, and then it's helpful for agents because by the time the consumer reaches you, you have a sense that they're qualified, and agents tend to like having someone do that for them.
And I guess the last question on this line, like, how does that influence title company selection and lender selection? If Zillow is the broker on the transaction, they're kind of an aggregated point of demand. How do you think about that?
I think in the scenario where a lead still goes to the individual agent, like the scenario that we just described, it's still the agent who's deciding, who's basically taking client control and then deciding downstream of that. Sometimes they play a role in choosing lender and title, sometimes they don't. But either way, it's kind of like the agent and the consumer are kind of working hand in hand, and Zillow or Realtor.com no longer plays a big role in that. I do think as you get more into the iBuyer model, and for companies like Redfin that to me are more like a corporatized real estate broker, where it's more about you work with Redfin and the team of people that are helping you. It's less about like I have a relationship with Nate or with Paul or whatever. It's like I'm working with Redfin. I think in those sort of more corporatized real estate situations, I think you will see the open doors and are already seeing Opendoor, Zillow, Redfin launched their own launched their own mortgage business.
Right.
I don't think any of them have yet done title, but maybe that's coming next. I don't know. So my sense is a lot of real estate brokerages basically run barely at break even on the actual company dollars off commissions, and then generate a lot of margin on mortgage and title. And so for those corporatized players, I think you will see them trying to control that a little bit more. But again, it's such a fragmented space. I mean, Redfin's national market share is less than 1%. Right. And Opendoor's national market share, I think, is like a half of 1%. And so while these companies have real scale and are growing so quickly, it's still just such a big space that I think it'll be a while before that becomes the core.
Maybe some closing thoughts
Yeah.
on what would you like to invest in this space? Like, what types of businesses are most interesting?
Yeah. I do think this residential real estate transaction I think there's a lot going on in that world. And I feel like we're just maybe a couple innings into it. So I think there'll be a lot of interesting evolution there. I do worry a bit about the point that you made about just so many players entering it. So I guess just generally, as I'm looking for companies to invest in, it's kind of a big market and a really strong product, but it's also something that feels kind of defensible, where I could imagine 10 other companies entering, and still this company has something unique and special.
Yeah.
So I think there's a lot of interesting stuff kind of in and around iBuyer and residential brokerage. I think rentals is actually quite an interesting space, and no one's really built the Zillow or Trulia for rentals yet. Zillow and Trulia have been attempting that for many years, and I think gradually scaling, but it's still, I feel like there's sort of white space in renting, and I think as home prices in the country keep appreciating,
yep,
owning a home becomes less and less affordable, and rental becomes such a more attractive option for many people. So I kind of feel like the rental space is pretty interesting. I think the Airbnb phenomenon is really fascinating to me, and I think a lot of folks are kind of taking their home that they were like a second home that they were using for vacation, and now obviously doing a lot of Airbnb-ing of it. And there's a lot of companies trying to come in and sort of corporatize that, whether that's Sonder or Lyric, sort of securing space and putting that inventory on Airbnb, or companies that help individual property owners sort of property manage their Airbnb. Those are just a few spaces. And of course, title, super interesting as well. I would say I'm slightly less knowledgeable on title, but I know it's a massive space, and it feels like so many of these other categories, just a space where there's just slow to adopt technology. I'm thinking over the last 10 or 20 years, and hopefully starting to change in that regard.
Yeah.
Yeah.
Thank you very much.
Yeah, my pleasure.
Thank you for coming in.